Okay,
Oh,
then
Branson, you should share that. Sorry. Uh, you should share on the Bloomberg public information stuff.
Okay.
Okay, guys, welcome back. Um, welcome back. It's Jay, Branson, and John, the GOTEM Fund. So, sorry, Jay, please give your update. Then Branson, go ahead. Yep.
Yep.
right. Okay, so currently it's slightly less than 10% down. Like we bought in at 1750, if I'm not wrong. Now it's currently at one.
1700.
Yeah, no, now it's seven. Now it's currently at 1600.
Oh, okay. It went down a bit.
Yeah, so it's currently a loss, but I think we all believe that this price won't hold lah, recover lah. So yeah.
Okay,
Okay.
but relatively for us going all in on a memory type play, we didn't blow ourselves up like situational awareness.
Yeah.
We apparently don't really have a lot of situational awareness. Almost blew themselves up. And looking at my friend sent over like a photo of like the funds performance, right? Like it's a screenshot on Bloomberg. Lots of funds are also down relative. I think because of the
Actually,
whole
Branson, you
AI.
can share your screen. You can share your screen, actually.
Oh, okay. Wait. I need to cover up some stuff.
Sure.
Okay. How do I? Okay. Let me share my screen.
Jay, well, what our cost basis is what? 1.7
1750.
1750. Okay.
Did you guys see?
Yep. It's a bit blurred though.
Asia stock picking hedge funds plummeted by July rout. Diamond Asia down negative 6.5%. That's rough, man.
This is for July alone.
Yeah, for July alone.
Okay. Okay.
I mean, they're still up, but relative to us, well, we can't compare like the size, but I think for this kind of funds, right, there should be a lot more taking care of the downside compared to us like going all in one stock. So
Yeah.
relative, I think we're still okay. And also given that we didn't really buy SKHY anywhere near the top so far, I think we have still a pretty good cushion to ride out and see what happens next. I think given what's happening in the whole AI world, more Chinese models coming out, OpenAI releasing new models to compete, expanding their TAM, right? I think it should still be fine. The demand for memory should still be there. Just that whatever happened recently is all because of a fund blowing up, so should be fine. Should still grind it up. Anyways, the valuation for SK isn't that high.
Yeah.
Yeah. So I think we should still be fine. So
Actually, wait. Your screenshot says 7.5% year to date. Can you share again? 7.5% year to date, and in July alone is negative 6.5. So actually, they were up double digit lah.
They were
right?
up. They were up double digit, and then I think they never really take care of their downside. But then again, for like a multi-strategy investment fund, it should be quite diversified. Suffer that kind of drawdown is quite insane.
I mean, it's supposed to be lah, but apparently not lah, right?
Yeah.
But if you think about it, they were up 900 million at one point lah. So they're doing well lah.
But if you get the other returns, some funds are even down like 13% to close to 20, 35%. Technology focused equity long short fund, like this fund called, you see what?
Master.
Yeah, down negative. Okay, but it's still up like 55% for the year. But
the guy is basically long memory.
Yeah. Yeah. So I think we should still be okay. But though this Singapore fund, Quant H, doing very well.
But actually they're quite big, 7.36 billion.
Yeah.
Who is the provider of the capital?
I have no idea. They're quite. All I know is that they're Singapore-based fund.
Like you don't even know these names, but it's like 7 billion. What the heck?
Yeah.
Okay. I mean, I watched a video of those guys. Apparently, they grew it from 3 million like 20 years back.
Bruh.
Shit. Give this guy like more money, man.
3 million, bruh. Okay. So we need to take our $9,000 and turn it into 45 million to get new capital.
Yeah.
Right. Okay. So back onto schedule. Are we gonna go round robin again for the picks?
Wait, so the YouTube title is "We are outperforming Diamond Asia Capital," right?
Technically, not really for the month because we're down.
Or how about the title we didn't blow up?
Oh yeah. That'd be nice. We have situational awareness.
Sure.
Yeah.
Okay. Let me share my screen then. Can you see my screen?
Yeah.
All right. Welcome to 4th August meeting. Okay. Right now we are holding an SK position that's down
About 10%.
About 10%. Okay, with SK I just checked, it's about 1.57 TRW million. We bought in at about 1.75, right?
Yeah.
Yeah. Currently at 1.6 from what I see.
I'm seeing here 1.57.
Okay, then just take that.
But actually, we're not down 10%. It's the entire fund. But,
Yeah.
We are about. Yeah, actually, it feels like about 10%. Yeah.
Yeah, around 10%.
Yeah, it's about 10%.
Okay, gotta dig ourselves out of this hole. If you all didn't know, the Bitcoin guys, right, what they always say, right, you gotta zoom out, guys. You see, when you zoom out, everything looks fine. You gotta zoom out, dude.
What's the market cap now of SKHY at this price? 1.15 trillion. Oh.
Anyway, if you see the macro news, they all say that memory shortage is almost guaranteed to last until 2028 lah. So
yep,
that's bullish for us.
Feels like it should be at least minimum 1.5 trillion. If Micron can go up, Micron's 1 trillion, right? At one point.
Yes, I believe it is still
Still in the 1 trillion range.
Hey, how do I change it to?
I think you have to change the okay. Close to 1 trillion, it's over trillion. Okay. Well, SK has a bigger market share compared to them, right? So
yes, actually way bigger. I think almost 3x bigger.
So I think it's
Micron is overpriced.
Even if you go on a relative scale, SK should be proportionally way higher in terms of market cap.
Yeah. Actually, if we took Jay's strategy, we would have been cooked, right? Because Jay, you buy on a massive dip, right? Then you long it, right?
Okay, here's the thing. I buy a massive dip, but also I buy when it's near all-time lows. So if I look at this chart right now, it's nowhere near all-time lows, so I wouldn't have bought this.
Oh, okay. Understand.
Relative lows, like local lows. This should be like a local.
Your lows are really like NVO type lows. This one.
I got this shit, man.
Like my most recent the GoDaddy trade, that one I bought that literally 2018 prices lah.
2018.
If you zoom out to the max, you go check 2018. It's around the same price as what I bought it as lah.
Oh wow, this one is it? This $88.
Yeah.
Okay. Okay, understand. So you really buy the super lows of the lows lah.
I mean, this one was a pretty high. It was a pretty degen trade lah. So I gotta make sure that at least the low is as low as it can go lah, right?
Yeah, but when you buy MSFT, you're not buying the lows. You're just buying on a dip, right?
That is true, but at the same time, as MSFT if you see the all-time high is 500 plus, the low of like 300 plus is a no-brainer lah. But right now it's at 400 plus, so I probably won't buy that price.
Yep. Okay, understand. All right, we're down to 10%. I don't think I'm selling, but okay.
All good.
We can just give ideas, I guess. Yeah.
All right. I guess I'll go first. Well, I have two ideas actually. The first idea is just to stick with what we have, which I still believe will still play out like. Even if I think there might be a stronger bounce soon, then we can see if it reaches like a local high and or resistance, then we see what we can do there for now. But the thesis still stays the same for SK. The other pick I have is I think you guys heard it before, which is given actually, right, to be honest, there isn't much opportunities or anything attractive now in the markets, in my opinion. But I would like to still pitch for Reddit. So recently, right, it suffered quite a big drawdown because of two main issues. So first, right, there was the uncertainty relating to Google's deal renewal. So actually, on a larger, if you zoom out for Reddit, right, the Google deal is only $60 million a year. And I think, right, the reason why they are not, the deal hasn't been announced yet, right, is probably because they're still negotiating for a bigger deal. I see some comments like on Reddit itself, like the Wall Street, not really Wall Street bets, but some subreddits are saying like Google should just buy up Reddit entirely, man. When they can afford to,
that's
the data is there, yeah. And all this most of this like content, right, and data available on Reddit is all human generated. So I think that could be a mode by itself. And as for its financials, I think it grew very strongly. Like people keep talking about, okay, Reddit may have some issues with user monetization, right? But actually that's not that correct, because their average revenue per user, I think, grew by like 60 something percent, if I'm not wrong. Let's double check. It grew by revenue grew by 61% year over year. Average revenue grew from like $4.53 per user to $6.18. So that's quite strong. Still profitable. I think the valuation, right, if you look at it from a absolute perspective, it's still quite high, right? It's at I think 51x, 36x for PE.
The ARPU drops in Q1 because of what?
Oh, it didn't drop. It raised, right? It rose.
No way. You see my screen? 598.
Probably because of the seasonal thing, like Q4 probably higher. And I think
it's advertising, basically, right? Advertising.
Yeah. But the Q2 compared year over year is stronger, and I think the bear thesis is widely overblown. I think probably when a new deal comes, I think Reddit will jump really surge. But anyways, after the sell down, right, price I think actually recovered quite strongly. I think it was up 10% yesterday. So if price continues to like chop around the area, I think probably they're gonna wait for like a catalyst to send it up higher. But I think even if you don't account for the Google deal, right, it's still a very small portion of their revenue and it's growing pretty strongly. So I think it's worth looking at. But another issue that I think is more worrying about for Google, right, is because the CEO said like their search referrals were choppy. So I from a marketing perspective, I don't really know what that really means, right? So I do seek your opinion here. So they say like what the CEO said, search referrals were choppy, traffic was more volatile in the quarter. Our visibility on search continues to remain low.
I can tell you what it means.
What does it really mean?
So if I go to Google search, like people are finding like the traffic that's referred from Google to Reddit is decreasing or choppy, but it's like it's high some days and low some days. So that it's not very consistent, and it's because of this, literally the product one using this AI mode, for example, right? It's like I'm scraping all of that data through, and obviously Reddit is benefiting from the $60 million per year. That's why they're able to even pull this shit out. But because of that, then the people clicking into the link to go into Reddit is decreasing, or like Shopee lah. So that is volatility and that is uncertainty. So people obviously don't like that because it means that the traffic decreases and then the ARPU will also, it may get affected lah.
So their top of funnel into their site is a bit volatile because of the AI related search mode now lah. Oh, I see.
So I mean, like the core base of Reddit users, like they will open the app, right? They don't need to go through Google search. But for example, for me specifically,
Someone who's not using Reddit.
Yeah, I'm not a hardcore Reddit person, so I don't like naturally go to the app. I only go to the app if there's useful information. Yeah.
Mm-hmm. So that's the thing that the CEO flag out, which I think also why it sold down.
Yeah.
But I think but in terms of like the stock price kind of catalyst, right? Once the deal is announced, I think prices will go back up to recent highs, which is around 200-ish. But for now, I think until that deals come, it may remain choppy. So it's kind of like you in it and then you see what happens if there's a catalyst or not. But otherwise, other than that, even for the long haul, I think given its growth, I think it's not bad also. Like
okay.
To enter yeah. That's my play.
Okay. By the way, this is what I mean.
Oh, I see.
The people who are like I'm not searching on Reddit for this. I'm going to Google and I'm searching.
Google,
then I'm going in and clicking on Jianhao.
Yeah. Oh shit.
Wow.
Okay, so Branson, entry 154.
Ideally, right, I wouldn't want to enter at current price because I think prices may like range about. So I would prefer to enter like near the recent lows, which is around 140. That
140?
range. Yeah, and then take profit will be around 180 to 200.
180 to 200. That's quite significant. It's almost 60%.
Because the other day it just dropped 20% one day. After
but considering the drop after it immediately came back, right?
Yeah, it bounced back quite strongly.
Yeah, if plus 9% is very strong. Yeah.
Mm-hmm. But then again, yesterday everything went up quite crazy. Yeah.
That's true.
Yeah.
Okay lah, but you see EPS, everything looks fine.
It's always beating, man. It's just I think the markets were expecting like some kind of like hopeful commentary on the deal renewal, but the CEO never really gave it, and then gave it a bad news, a bad kind of commentary about the search referrals being choppy.
Yep.
Slow it down, yeah. But at least he's being honest.
Yeah. This is very impressive.
Yeah, that's why.
AUs. Yeah.
And this is when it's choppy. And search traffic with concern with sync stocks, but then the daily average users is pretty strong.
What's their PE?
36.
Now I think it's 36. I think for the growth rate, it's not that bad.
That's pretty okay.
It's growing like 61% year-over-year. It's pretty strong.
For platform companies, as long as the product is sticky, you don't have to worry long term, I would say.
What's the margins?
The gross, I think it's super high, man. Let me check. Quick clock search. What is Reddit?
Technically, this should give me, but Google's not doing a great job.
Just ask for the income statement. Okay, this is good.
Net margin 31%.
27.
Oh shit, that's like a divergence.
Sorry, my bad. 31. 31.
31, right?
It's almost like a Microsoft level profitability.
Gross, I think it's very high. Should be very high.
31 is pretty insane. Yeah, let me see the gross if it's possible.
Gross is
don't have it, right?
Not really, but 10%. 90%.
90% is insane.
Yeah.
No, actually, it's almost like 91%. It's like, you see, 800, 70 is like 91, 92%.
Yeah, around there, lor.
So let's see.
It's a purely advertising business. I mean, it's quite clear.
The data feeding gig is a side gig. Just
Yeah, but that one is pure profit at the same time.
Yeah, correct.
I think also this one also got beam stock potential because it's ready lah. People when they see the dip, they'll pump it lah. Like, yesterday it went up by 10%. That's insane.
I always look at like the Reddit forums, right? Subreddits or like investing or like they keep talking about like you buy Reddit, man, you buy you buy
Yeah,
Reddit.
yeah. So there are people already pumping it. Yeah.
And but now they're back holding lah, so they gotta zoom out.
Zoom out.
I think it's a pretty good business lah, but I personally wouldn't buy after like the 10% yesterday. Like wait for better.
Yeah, that's why I'm not gonna buy anytime soon. So if it runs, it runs because I prefer to wait a bit lower. Yeah. Because I have a feeling the stock will just range for a bit until like there's some developments about the Google deal. Yeah. It's not nice to play options on this also because you don't know when that will happen.
Oh no, I'm never gonna play options on this, man. I mean, like if I see you up 10% one day, you can easily down 10% one day also, right?
Yeah, we're down 20% the other day, man.
30%.
20 something percent.
Oh yeah, 21, 22, yeah.
Yeah.
It's kind of crazy. Yeah. But as an investment, it's a good company, to be honest. If you hold long term, I think it's okay.
Yeah, I think for our fund, it's okay if it drops a bit further. Then we see how.
Yep.
Okay.
Okay, so my main idea this time is okay. So I got two ideas. One is a growth play and one is a defensive play. So okay, I start the defensive play first. So my defensive play is P&G.
What is the
Right. So okay. So basically the idea is that if you
the ultimate range bound 5 year?
Yeah. So okay. So basically my pitch is that okay, if you look at the beta at the bottom, it's 0.39. That's like piss low. That's like fucking low already. So like this is stable lah. This is the FMCG. It produces stable cash flows. And if you look at the P ratio, it's around, if I remember correctly lah, around 20, around low 20s. And essentially the reason for this stock is because I'm predicting that since interest rates are gonna rise, and I'm predicting okay, possible the yen carry trade is gonna unwind. So they're gonna unwind all the tech stocks, they're gonna unwind all like the growth, the high level stocks, and usually people don't lever FMCGs and consumer staples. So that's my main idea for this stock. And honestly, if you Google the main analyst ratings, this stock is slightly undervalued. So this is my defensive play.
Okay. So it's a short swing, you would say.
Basically, if I were to buy this, I'll enter at maybe like 138, 137, these kind of prices, and then I'll sell at 150 for short swing play.
160, is it?
150.
So that's about what, 15%?
Around less than that, maybe 10.
Okay.
Yeah, it's a short swing play, and it's to hedge against high rates because I have no idea what the repurchase of yen is gonna do.
How did P&G perform during the last rate hike cycle? That was back in 2022, 2023, right? If I remember correctly.
2022, 2023.
So I remember back then a lot of stocks also took a shit, but there was some late March to July perform okay.
Classic defensive consumer.
Headwinds from P&G suburb, lower volatility, experience brief periods of downside. Oh, okay. Recovered towards high.
Yeah, I think it's like if you see the previous few years, their financials is undeniably strong lah. This is a value play.
I think they get the timing right also because
Yeah.
initial few rate hikes, right? If there's going to be a rate hikes, it's probably going to
Yeah.
send everything down. So after that, then maybe after
Yeah.
one or two hikes, and this will be the
Okay, so I think the beauty of this, the main beauty of this is that even if you see the 2022, the rate hikes didn't affect it like that much. Now, okay, like there's a huge V at the October, lah, but if you ignore that part, it roughly stayed at the 150
they
range.
ran up. Okay.
Yeah, so this is like a main defensive play.
Okay.
Okay, and then the second play I have is a growth play that I think that was more exciting, lah.
Wait, but
Uh,
Jay, you see here,
Yeah.
in a rate hike, the banks are the ones benefiting. So
Consumer
wouldn't this
staples,
be more defensive? Yep.
consumer staples as well, and I think the bank stocks have risen too much over the past year due to AI.
Okay.
Okay.
Okay,
Sorry, please
so
continue.
yeah, so my second play is a more growth play, Broadcom.
Oh, Broadcom.
Yeah. Okay, so Broadcom, if you see the stock, basically, you look at the PE ratio, it's a bit expensive lah, but the main context is that they are somewhat like a Microsoft. They are selling both hardware and software that is both relevant to AI.
Mm-hmm.
Right. So
Considering it's so big, how much can this move?
okay. Disclaimer, I will not buy at current prices. I'll probably buy it when it drops to maybe 370.
Near this.
Yeah, lah, basically.
Yeah.
Here. Basically here.
Yeah.
Okay.
370, yeah.
The thesis is probably the same as SKHY, just a continued rollout of AI capex.
Okay, so my thesis is that this is I am hoping like for like a moonshot kind of thing lah, like a Microsoft where you up like 20% in like one day suddenly lah, where people realize it's undervalued.
Or that probably needs an earnings day or something like that.
Yeah. But the thing is, if you look at all the analyst reports and basically you look at the businesses they are in and look at their cash flows, it's all pretty healthy lah. So my thesis is that the downside is sort of protected already. Unless in the future there's another Cosby liquidation, I don't see this like going like down a lot.
Yep. So you should continue grinding out as
Yeah.
even as the earnings keep up the valuation.
Yeah.
Okay.
So yeah, this is my growth player.
Why not buy Nvidia since it's cheaper?
Why not buy Nvidia since it's cheaper? What?
It's basically the same movement. Like it's literally the same movement. See?
I think Nvidia is too concentrated on the AI trade. Like AVGO, even if let's say you totally ignore AI trade, they still sell VMware lah. And every company needs it.
Huh, really? Actually, my friend works at VMware as a marketing manager. But
Almost MNCs lah, most large enterprises lah.
isn't VMware just visualization software for PC?
Yeah, but they earn a lot from it, man.
But why would every company need it?
Wow. Okay, I'll be upfront. I don't know the intrinsics of VMware, but from what I heard, because it's vital lah. That's what I've heard lah. Yeah. Okay, maybe this part of my thesis is a bit weak. But from what I've heard, they are the cash cow lah. VMware itself.
Actually, I think also because Nvidia's market cap is 5 trillion. It's a bit hard to scale higher. Like you will get to 6 trillion, right?
Yep.
This still take some time, I think.
Okay. Do you have like so buy at 370, exit at what again?
Maybe 500 plus.
That's quite a big movement. That's almost like 2 point something trillion market cap.
Yeah, it's a buy and hold. It's a buy and hold strategy lah, basically.
Okay. Okay. I also have 2 plays, but to be honest with you, I'm not super convicted. Or like, I don't think they're really, really strong. But the first one is On Running.
Oh, okay.
I went to Japan and the queue is very long, to be honest. So it's a purely speculative, like, man, this brand is really popping, man. Seriously. And then even in KL or whatever, yeah, I just see people, and then now the stock is going down. So it is still expensive, to be honest with you, at 41. But considering that Nike is what, 100 billion plus market cap, and they are a premium product, I've never seen them on discount before. So they grow the revenue very consistently, right? Like Lululemon lah. I mean, I don't think it'll break like Lululemon because they don't sell $250 pants. They sell $170 shoes. It's more like palatable. It's like, oh, there's technology in this thing, whatever, blah, blah, blah. And I've seen my aunt wear this shoe. She's also like a diehard. She has 3 of these shoes. So like, it's completely unbiased opinion of like, okay, people who really like this brand, they love this brand. Like Reddit, the people who
I
really
love
use
this
the
brand
product.
as well.
Oh yeah, exactly. So it's like, I don't know what they put the spell in this shoe, but like they really love this brand. So the revenue shows up. They don't give discounts. So I know that even in a bear market or whatever, the consumer discretionary category, right, they're not gonna get significantly affected because only rich people buy this thing. Yeah. If you're not rich, you're gonna buy Nike like trainers, $80, $100. This is like 170. So the margins, I would say they're great, but because they have pricing power, they will always grow, I feel.
Yeah.
And then they're not like Nike, where like Nike kind of lost its footing of like what it is. On is like, we are performance wear, we are runners, and then we have some clothing, basically. So I think the consistency in the mission is quite evident versus Lululemon, where the ex-CEO is like became like crazy. Yeah, you start talk shit about your own company sort of situation. I don't know whether you're aware, but yeah. So I mean, the growth has been consistent, and they've been in public markets for 5 years, right? So it's kind of proven that they can run a profitable business per se, and because they sell to the K-shaped economy, the rich people, I think this is a good buyer. So I mean, now it's down, right? So yeah, if it's at 36-ish, 33, I think it's worth some, yeah, I think it's worth. And then in terms of what is the turnaround play, I actually don't know what the catalyst is, to be honest with you, but I just know that every day more people come on Strava and people love running. So naturally, consumer doesn't grow very fast, but it just grows consistently, generally. So over time, I think it should compound. So if you can exit at $45 or $50, I think it'll be a good player. Yeah, so that's my first play. My second play is a bit more niche, I would say. I don't know whether you guys know this company.
Ep.3.
Yeah. So Ep.3 is like, in advertising, like Facebook takes 70% of ad dollars, basically. Google takes 25%. And then the rest of the 5% is like just donation to Pinterest or like
what do you do?
Taboola, whatever. So Ep.3, what they do is that when you play a mobile video game, you have ads. So you play Candy Crush, right? The free version. Then you just have ads. Then when the ads finish, then yeah, whatever. But if you click into the ads and then you buy the product, for example, they sell CPM, CPCs, basically. It's basically advertising platforms. Yeah. So they have the reason why the stock popped like so randomly here, right, is because recently they just reworked their recommendation engine, whatever. And that's why you see the stock really like become very big. It's like $100 billion plus company, whatever.
Wait, so if I play mobile games and I get interrupted by apps, is this company?
Yes.
Oh man, okay.
Yeah. And if you know, mobile is the fastest growing segment of the gaming market. Like Sony, PlayStation, everyone's getting cooked. The free-to-play mobile market is the fastest growing, whatever. And so basically, I know it sounds stupid, but the growth engine of this company is mums. Because mums play mobile games more than everybody else in the world. and they have the
Makes sense,
highest
makes
purchasing
sense.
power. So yeah, the e-com companies, right, the beauty brands and then the supplement brands and everybody brands, right, they're just spending a ton of ad spend here. And I'm hearing some people can spend 50, 100K a day in ad spend on this one platform lah. Yeah, even on Facebook, for example, it's hard to spend 100K a day, for example. So it's like this platform has come out of nowhere and it's suddenly getting a lot of ad dollars. And so now it's obviously after the peak hype. Now I think it's sitting at an okay valuation. Where's the PE? Yeah? It's 34, right? It's not crazy. I mean, it's not like
It's actually pretty
45.
reasonable.
It's not that high.
And then if you see the revenue, the revenue
it's
doesn't
not
skyrocket, but it's a consistent money grower. And in Q4, this thing always pops up because of same as Reddit. It's an advertising platform. So you see the gross margin is almost what? It's like 90% or so. It's like 80, 87%, something like that.
Yeah.
So it's a profitable double digit. Sorry, what am I saying?
The net profit margin is damn high.
Where's yeah? 65% net profit. Yeah.
I didn't know app loving has such high margins.
Yeah, so their only fixed cost is like negotiating with the game publisher lah. Yeah. And of course, like from the game publisher side, they also want to make money. So then they're like, okay, let me partner with these guys. I make a few bucks here. And then I don't know about you. I think mobile games is gonna be bigger than ever.
Yeah.
Because the Sonys and PlayStations, they're upping the prices because of memory, right? So the new generation of gamers cannot afford the new thing. So the Gen Z are gonna play mobile games, to be honest.
Yeah. But there's no catalyst, right? It's just it just grows over time.
It's just underpriced now, I feel. Yeah.
Maybe a catalyst is like a new Angry Birds lah. Like a super popular game, then this will probably jump lor.
Correct. But if you think about it, it's like any Genshin Impact or whoever comes in the market, right? They always benefit. They're basically they take a toll.
See.
Yeah. So 406, right? Even if it goes to the all-time high 700.
Oh, that's quite a big fat margin.
Yeah, you buy a 400, 406. Even if you exit 650, 600, I think it's a good 30%, 50% gain. Yeah.
Nice.
I mean, the profit margin is the juiciest thing I've ever seen in a public company. So
Right. Time to cast votes.
all right. Okay, so I think we have SK. We have Reddit.
We have PG.
CNC.
On
AVGO.
AVGO. Ep.3.
Okay, I guess everyone has 2 votes, right?
Yep.
I mean, okay, I can start lah. I definitely think we should stay. Maybe I should cast 2 votes, yeah. Okay, but if it's SK, and maybe I will select Ep.3. Yeah.
Jay, you go first.
For me, I'll go SK and Reddit lah.
Okay.
I am SK and contingent kind of situation on Reddit, and also app loving actually. But I can't so many votes.
Yeah.
Yeah, I'll say SK and app loving because Reddit I'm still waiting for a proper situation. App loving is like it can be a long now, but anyways, I think we're gonna stick with SK.
Yeah.
Decided.
Okay. How if we edge out like a 5% gain, right? Are we leaving?
Let's see. Okay, let's have some trade management here before we close off. So realistically, now where do you think prices could end up if there's a bounce, stronger bounce?
I don't know about you,
mean,
but like I think it's going up to all-time highs.
yeah, same. I
So
mean, if you look at all the headlines, they show that they say that the memory shortage is going to last all the way to 2018 now. So that's a really bullish headline to me. Yeah.
Yeah. I think I can still say that. I think the recent sell down is just leverage being cleared out and the hyperscalers just getting some flows going back to them.
People are cashing out lah, basically. And
Yeah,
honestly, it's like I wouldn't think of selling this until it reach maybe 2.5, right?
yeah, around there too, I feel. So we just stick on for now until like maybe once it reaches like 2.3, 2.4, then we relook into it. But I think wouldn't be that fast. Maybe it'll be a grind compared to that previously because there's no leverage now. Less leverage. Yeah. Just stay on.
Okay. Should we sorry, I know I asked this before, but should we try Jay's option contract one time strategy? After we
on
exit?
SK.
No, of course not. Like after like okay, imagine you get a 8% gain, whatever, exit the position, right?
Do
you think you should try Jay's strategy one time?
I think we have to buy very long-term contract because we only make like decisions every 2 weeks or something like that. So, but options quite volatile.
Okay, I give you a second idea lah. Our account is a margin account lah.
Okay.
Right. So how about we buy equities on margin?
What's the difference? Sorry.
But we have to fund it then.
Yeah, if we draw down, then
okay, from what I've seen on the interactive broker, the platform, the margin that we can draw is like 5 or 6 times. So what I'm thinking is we don't use a full 5 or 6 times, maybe use 3 times. So the idea is that even if it declines, we will not get activated.
We won't get margin call lah. But we need to do the math.
Yeah, so we have to do the math lah. But essentially my idea is we don't max out our margin. We leave a reasonable safety where let's say we do simulation where okay, even if a stock drops by maybe 10, maybe 20%, we will get margin call.
Yeah.
And the main difference between options is that options you have to account for 3 things lah. Volatility, delta, and beta, which is time burn. But then for margin, okay, correct me if I'm wrong because I've never used margin before. But from what I heard, you don't have to call about volatility, and theta I don't have to care. Maybe they charge you a very, very small interest rate, but that's about it.
Yeah, I think they charge you on you have to finance the margin, but if you don't go too far, you don't go for like 3x or something, you go maybe 2x for a start.
Yeah.
Get a few of it first, then we
learn
as we go anyways.
Yeah, so I think from your end, if you open up interactive brokers, like just from the view from view lah, you can see that the margins that they are allowing us, from what I recall, is around 5 times lah.
Yeah.
So my idea is we don't do 5 times, we do 2 or 3 times.
Yeah. Then
we can draw down the principal lah.
Yeah. Actually, do you mind opening your interactive brokers for GOTEM? I also want to double check like the margins.
I don't have on my.
Oh, okay.
Branson, do you have on your laptop?
No, don't have also. I don't have the.
Wait, Jay, isn't it you? Don't you need an authenticator?
Let me see on my app. I thought Branson can also like verify.
Okay, I transfer it to you already. It's not my phone anymore.
I see. Let me see. Okay. So I'm just reading up on my phone screen right now. Total cash is total cash that we have on SKHY Hynix is around 8K, but our buying power is 19K.
So about
2x
2.5 lah, around there lah, right?
So actually we can't
8K, 19K, right?
Yeah.
Okay.
So actually we can't go 2x anymore to be conservative. We can do like best 1.5 or something like that.
But okay. I tell you what, the next when we sell SKHY Hynix and we buy our next like stock, our screenshot what we can buy using cash and what we can buy using margin. Then that'll be yeah.
I think because maybe now we're holding stock, then it's a little bit more not the full picture. Okay. So we will explore that idea further once we get out of SK. There's again Leopold.
You only can get margin call if what? If the stock moves below your cost basis, is it?
No, when your margin requirements, right? The contribution margin or something like that exceeds the value of your account, then it will just close the position for you, and you get margin call.
Yeah, I mean, okay. So the general theory is that the cash that you had that you can liquidate at any one time must stay above a certain percentage.
Yeah.
Okay.
So need to calculate properly, like the exit levels and stuff. So make sure you don't get margin call.
Yeah.
Because once it gets like to a dangerously close level, right? It's like like Jesus takes the wheel, really, man.
Oh, so if you have like $10,000 in the account, it draws down 8,000. You're still okay because it's not 10,000. It's
Correct,
only at the 10,000, then they say okay, bye, cannot.
Yeah, it's like a forced liquidation. You can't even do anything about it. Like
Okay.
everything just closed and
Like
then your account is just
Leopold lah, like Leopold, yeah.
yeah. We don't have Ken Griffin to come save us, man.
I don't think he wants to buy a book. Who wants to buy a book?
Nobody.
Okay. So this is it's just a gambling channel at this point.
Yeah.
Educated gambling.
Yeah. The YouTube episode, right, needs to be like the all-in podcast. You know, the title has like multiple things happening.
Oh, I see. Okay.
It's like SK, margin call.
SK, we didn't blow up.
J's 10x.
No, leave the 10x out of it.
Okay.
We're still recording.
Yeah, we're still recording.
Oh shit. All right, thanks guys.
Okay. Ken. All right. Okay, Ken. Thank you guys.
Thank you.
Okay.
Guys.